Nancy Pelosi's family portfolio gained over 16,000% since 1987. The Dow Jones returned 2,300% in that same period. This significant outperformance came from aggressive options trading. Many trades align with major governments' announcements. But be careful, direct copy trading is challenging due to reporting delays. Yet Pelosi's example shows how information can drive substantial returns. Nancy Pelosi plans to leave Congress in January 2027. Her retirement renewed public discussion. Much of this centers on her family's stock market performance. Her husband, Paul Pelosi, manages their investments. He is a venture capitalist. Their wealth stands at about 280 million today. This grew from roughly 3 million in 1987. This represents a substantial increase. Paul Pelosi often uses call options. This grant the right to buy a stock. He can buy it at a set price by a specific date. The strike price is often well below the current market price. This strategy uses significant leverage. It can magnify profits, it also carries elevated risk. His timing has been notable. Many trades occur before major legislative actions. The family portfolio grew over 16,900% since 1987. It surpassed the Dow Jones by a large margin in that period. In 2024, the portfolio returned an estimated 70%. The S&P 500 gained about 20% that same year. This consistent outperformance is rare. Few hedge funds could get it. It has earned Nancy Pelosi nicknames like Queen of Stocks. These returns fuel a debate about insider trading. Critics point to the precise timing of the trades. They suggest privileged information was used. Nancy Pelosi denies wrongdoing. She states her husband manages their investments. She claims she is not into it. Calls for new laws have emerged. Some bills aim to ban stock trading by politicians. Figures like Alexandria Ocasio-Cortez and even the Treasury Secretary Scott Bessent support a ban. These proposed bills are often named after Pelosi. The situation spurred a new trend: copy trading apps. Autopilot and Dove Advisors are examples. They allow retail investors to mirror politicians' trades. Autopilot claims its Pelosi tracker returned 240 since January 2. These apps highlight a perceived informational advantage. They also aim to expose the systemic flaws. The debate continues regarding skill, luck, and other factors. This question remains central to political transparency. Paul Pelosi's strategy appears aggressive. Dan Weiskopf from Tidal Financial Group manages the NANC ETF. This ETF invests in trades by Democratic members of Congress. Weiskopf observes Paul often buys deep in the money call options. The strike price is well below the current stock price. Weiskopf suggests this implies a strong conviction. It also points to information beyond public knowledge. The timing of these leverage bets often aligns with legislative actions. This raises ethical questions. Let's examine specific examples of these trades. In July 2021, Paul Pelosi bought Nvidia call options. This occurred days before a House vote that bill would fund domestic chip manufacturing. Nancy Pelosi helped draft early version of the CHIPS Act. In late 2023, Paul exercised a call option. He bought 50,000 shares for 12 each. This cost about 2.4 million. Those shares later soared to 7 million. The CHIPS Act later passed, offering 66 billion in subsidies. The timing of these options drew significant scrutiny. A notable event occurring in June 2022, Paul Pelosi owned 25,000 Nvidia shares. He had exercised his options. The Senate was preparing to pass the CHIPS Act. On July 26, he sold all 25,000 shares. He incurred a loss of over 340,000. The Senate passed the CHIPS Act the very next day. His spokesperson stated the sale aimed to avoid misinformation. Critics view this as an admission of concern. Paul Pelosi also bought Microsoft call options in February 2020. He exercised these options on March 19, 2021. He acquired 5.75 million in stock. He paid 3.35. This represented an unrealized gain of 2.4 million. This occurred just before a major announcement. Microsoft won a contract worth up to 22 billion. They would build augmented reality headsets for the US Army. By April 5, Paul's position grew to 6.23 million. The timing again prompted scrutiny. Paul Pelosi bought Tesla call options on December 2020. He purchased up to 1 million in these options. The incoming Biden administration was expected to focus on electric vehicles. President Biden announced a plan on January 25, 2021. It allocated 174 billion for EVs. This included federal fleet conversions. Tesla, a major EV maker, saw its stock jump 10% in January. Critics question if Paul knew the plan's specifics. Others considered it a well-timed bet on an emerging trend. Paul Pelosi reportedly made 5.3 million from Google Alphabet call options. He exercised these in July 2021. He bought 4,000 Google shares. This occurred 1 week before the House Judiciary Committee advanced antitrust bills. These bills targeted Google, Amazon, and Facebook. Despite antitrust concerns, Google shares surged 3.2%. In December 2021, he bought 10 call options. This cost about $939,000. These disclosures in 2025 showed another purchase. He bought 50 Alphabet call options. The strike price was $150. This suggests a continued conviction in major tech companies. Paul Pelosi also bought Tempest AI call options in January 2025. He purchased 50 call options with a $20 strike price. This represented a bet on artificial intelligence. 7 days later, Tempest AI announced Olivia, a health AI and AI health app connected over 1,000 health systems. The stock price soared. Tempest AI increased 183 by January 25. Critics again questioned the precise timing. They suggested it seemed unlikely without privileged information. Paul Pelosi also made some timely sales. In July 2023, he sold 5,000 Microsoft shares. These were valued at 2.1 million. 4 months later, the FTC opened an antitrust investigation. It targeted Microsoft's cloud and AI divisions. Microsoft stock declined. Paul had already exited, avoiding significant losses. In July 2024, Paul sold 2,000 Visa shares. They were worth up to 1 million. 85 days later, the DOJ filed a lawsuit. It accused Visa of monopolizing debit cards. Visa stock dropped 5.5%. Paul had already exited his position. These examples reveal a consistent pattern. Paul Pelosi's trades appear remarkably well timed. They often coincide with market movements. These events are frequently legislative or regulatory. This pattern fuels an ongoing debate. It questions the ethics of Congressional stock trading. His financial performance consistently outperforms the market. This record contributes to the allegations. Official data comes from Congress. House disclosure PDFs are available through a public portal. These are primary sources but can be complex to read. Several websites aggregate this data. Quiver Quantitative, Unusual Whales, and Capital Trades are popular examples. These offer a public view of Pelosi's linked activity. Options trading is complex and highly risky. For my own portfolio, I prefer focusing on broad market ETFs and growth-specific stocks that have high moat and low competition. I also research specific company fundamentals for long term. I avoid direct options speculation. Copy trading apps also exist. Autopilot and Dove Advisors are examples. They offer automated ways to mirror trades. Users connect their brokerage accounts like Robinhood or Schwab. They allocate funds to follow a tracker. When a trade is filed, the app executes it automatically. Paul Pelosi's options trades are complex. Dove Advisors uses an algorithm to translate these trades into basic stock purchases. This makes them more accessible. Autopilot claims its Pelosi tracker shows a 240% return since January 22. This suggests the strategy can be profitable, even with disclosure delays. However, this is not a simple copy paste method. The Pelosi strategy is aggressive. It uses leverage, which means higher potential returns but also higher risk. Pelosi's option trades are often short to medium term. They typically expire within months or a year. This differs from a long term buy and hold strategy. Paul Pelosi is a strong Wall Street guy. We are just retail investors. We are not traders, remember that. Pelosi's portfolio appears tech heavy. Copying it entirely could concentrate risk in my own holdings. Diversification is a principle I prioritize. A critical factor is the reporting lag. The Stock Act requires disclosure within 45 days. A trade might be old news by then. The stock price could have moved significantly. This can reduce potential profit. It can also increase entry risk. While some argue the delay doesn't affect returns much, I find it a critical factor. Blindly copy trading can be problematic. Understanding the strategy and its risk is important. Investors typically lack the same information as Congress members. I always ensure any strategy fits my personal finances and my investing philosophy.